Everyone, and welcome back to Forex Scope. I'm thrilled you've joined me today as we dive deep into the exciting world of Forex. If you're looking for clear, actionable insights and future price trend analysis, you've definitely come to the right place. For today's video, we're zooming in on the AUDJPY pair, dissecting it with both the 15-minute and 1-minute timeframes. Whether you're a seasoned trader or just starting out, I'm confident you'll find value in what we're about to explore. Before we jump into the charts and uncover those potential trading opportunities, make sure you hit that subscribe button and ring the notification bell. That way, you won't miss out on any of our future analyses and timely signals. Let's get started. The support zone is identified between the price range of 100.263 and 100.30. This area shows clear signs of sideways accumulation and multiple touchbacks, indicating strong buying interest. Specifically, looking at the candles around timestamps 176, 274, 5400 and 176, 274, 6300, we observe a period where the price struggled to break below this level. The low price during this interval was 100.251, and the high price was 100.35. The fact that the price repeatedly tested this zone without a sustained breakout suggests that buyers are stepping in to defend this level. This area also features some larger candlestick bodies within the range, further reinforcing its significance as a potential support. The interaction of price with this zone suggests a balance between buyers and sellers, with buyers appearing to be more dominant at these lower price points, preventing further decline. The extended period of consolidation or repeated testing of these price levels points to a well-established floor. The resistance zone is identified between the price range of 100.714 and 100.721. This area exhibits characteristics of a resistance level where selling pressure becomes significant, preventing further upward movement. Observing the price action between timestamps 176, 280, 8400 and 176, 280, 9300, we see the price attempting to break higher but being pushed back down. The high price during this period reached 100.721, and the low was 100.67. The repeated rejection of higher prices suggests that sellers are active in this vicinity, exerting downward pressure. The presence of smaller candlestick bodies or longer upper wicks within this zone would further solidify its resistance nature, indicating failed attempts to move higher. The area shows a clear ceiling effect, where the market struggles to sustain prices above this level. This consistent capping of upward momentum highlights the presence of strong selling interest that is absorbing any buying pressure, thus forming a notable resistance. The lack of sustained penetration above this price band reinforces its role as a barrier to further price appreciation. This support zone is identified between the timestamps 176, 280, 1560 and 176, 280, 1740. Observing the price action within this period, we see a notable area where the price encountered significant buying pressure, preventing further declines. The lowest price reached was around 100.649, with a high of 100.686 in this specific time frame. The consistent lows and the subsequent bounces indicate strong demand at these price levels. This suggests that traders were actively entering the market, creating a floor for the AUDJPY. The area exhibits characteristics of accumulation, where buyers stepped in to absorb selling pressure, leading to consolidation before a potential upward move. The presence of multiple touches or near touches in this vicinity further validates its strength as a support level. The price action around these lows shows a tendency for the market to pause and find buyers, reinforcing its role as a significant level of interest for potential reversals. The confluence of these factors points to a well-defined support zone that has historically demonstrated its effectiveness in halting downward price movements. This resistance zone is identified between the timestamps 176, 280, 5040 and 176, 280, 5220. Within this timeframe, the price action reveals a clear ceiling where selling pressure consistently emerged, preventing further upward expansion. The highest price in this range reached approximately 100.72, while the lowest was around 100.706. The repeated inability of the price to decisively break through these levels signifies robust selling interest. This area likely represents a zone where sellers were more aggressive, absorbing the buying momentum and forcing the price to retreat. The price action here suggests a period of consolidation or potential distribution, where the market struggled to move higher. The fact that the price repeatedly tested and failed to break this resistance implies that sellers were well positioned and maintained control. The presence of relatively high wick formations on candles failing to close above this level further strengthens its significance as a resistance. This zone has acted as a barrier to further price appreciation, indicating a level where profit-taking or new short positions are likely initiated. The audience is captivated by the AUDJPY's recent price action, which has been oscillating around the 100.719 mark, hinting at a potential upward trajectory supported by the Fibonacci retracement levels. This area of consolidation around the 100.663 to 100.731 Fibonacci zone, particularly the recent touches near 100.736 and 100.714, suggests that the bulls are gathering strength. The interplay between the current price and the upper Bollinger Band, coupled with an increasing tick volume, indicates building momentum. Expect a test of the resistance zone around 100.745 to 100.755, possibly fueled by a break above the immediate resistance at 100.739. Should this resistance crumble, the price could surge higher, creating exciting opportunities for traders who are attuned to these subtle yet significant shifts in market sentiment. The market seems poised for a breakout, so keep a close eye on these levels as they unfold. The narrative is building towards a bullish continuation.